Don't be like this person.
Wait for me!
And don't be like this fella. Precious metals are taking off, and you might want to get on board because it's gonna be a wild ride. I'm Biko Konstantinos, and that's what we're gonna talk about today. If precious metals appeal to you, give this video a like because that will help YouTube share my content, and I'd really love it if you could subscribe to my channel so together we can discuss a whole range of finance topics. Now let's have a look at precious metals and why you don't want to be left behind. Since the start of February 2022 to the 4th of March 22, precious metals have been rising very strongly. If we have a quick look at the last month, gold is up 9.69%, silver up 14.3%, platinum up 10.31%, and palladium up a whopping 34.39%. If you want some specific information on palladium, check out this video here. So even though precious metals have seen recent rises, I believe we may be in the very early stages of their largest boom period ever. Obviously, nothing's guaranteed in the market, but in this video, I'm going to consider why precious metals might be about to really take off. And if they do, you'll want to be on board. So what's happened to create this environment where precious metals look like they're about to soar? Firstly, we had the global pandemic, which saw central banks flood the market with unprecedented liquidity and massive stimulus programs to keep the economy going. Now, this had the effect of not just keeping the economy going, but seeing bubble-like behavior in many sectors, including the stock market, real estate market, cryptocurrencies, and even perhaps the bond market. So yes, the Fed's action supported the economy through the pandemic, but what are the consequences? Well, one of the main effects is the highest level of inflation for 40 years. Rates have been so low for so long that they have to rise, and they might have to rise more aggressively than everyone originally expected. So we've got a high inflationary environment combined with rising rates that's going to put pressure on the economy going forward. Secondly, we've got a stock market that's looking more and more bearish. The S&P 500 chart shows that it had a massive rally post-COVID all the way up to this high in late 2021. However, the chart shows this large topping formation. It shows a head and shoulders pattern where we have the left shoulder, the head, and the right shoulder, and then a breakdown. So based on this chart, the S&P 500 is no longer in an uptrend and has commenced a downtrend. Cryptocurrencies are not seeing the gains that they previously enjoyed. As we can see from this chart of Bitcoin, since mid-2021, we've had some large swings, but the direction has not been a consistent upwards direction, more like a very volatile, perhaps sideways trading pattern. So with all the challenges for the economy, crypto at this stage is not outperforming the rest of the market. So it might be facing the same sort of pressures that the entire stock market is facing. You can invest in bonds or cash as a safety measure, but the risk is that the value of those investments will be eroded away due to the very high levels of inflation. So gold and precious metals are the ultimate safe haven in turbulent economic times, and throughout all history, they have been a source of intrinsic value. With the dollar, you can just print more and more, which has been done, and makes its value less and less. However, with precious metals, you can only obtain more if you dig it out of the earth. So from what I can see, there's not many current options that would really protect your investments apart from precious metals. And as more investors realize this, I believe there could be a massive run on gold, silver, platinum, and palladium, which sees the price of those commodities reach levels never ever seen before. And as the prices of precious metals go up, this will create more momentum as investors will see those gains and try to capture some of that profit. This will be especially true when many other sectors and asset classes underperform. Now let's take a look at the longer term charts of precious metals to see what they might be able to tell us. Gold has seen a very large upwards breakout from this wedge, and this current breakout has not looked back. So gold is now firmly in an uptrend. We've got the 50-day moving average breaking well above the 200-day moving average. This is a strong bullish indicator called a golden cross. And if we look back in 2019, we saw the same thing happened here, and it preceded a very large bullish run for the gold price. During this flattening out period in mid-2021 onwards, we saw this flattening out of these moving averages, but this latest spike upwards is very bullish in my opinion. Now what's really exciting with gold is when we look at the long-term chart. The previous all-time high was around about $1,900 US in 2011. Over the next decade, gold traded in a large curve which hit this low of just over 1,000 in 2015 and culminated in the post-COVID high in 2020 above 2,000 US dollars. So this large curve trading pattern we call the cup. And after that cup period, if we see a shallow downwards retracement, we call that a handle. And here we've got a perfect shallow retracement after this high that looks like the perfect cup and handle pattern. Now the reason why this pattern is very bullish is because it's taken a very long time to reach that all-time high hit back 10 years ago. We've had a shallow retracement, which is normal after hitting a new all-time high. And since then, we've had an upwards breakout. Now, confirmation of the cup and handle pattern will occur when the price genuinely breaks above the top of the cup. At this current stage, we've clearly broken above 1900, which is the previous high reached a decade ago. But now I think we need to genuinely break above 2,000 US dollars and consolidate above that figure to really confirm this cup and handle pattern in gold. A bullish price projection for the confirmation of a cup and handle pattern can be measured from the lowest point in the curve to the top of the cup. In this case, it's about 900 or 1,000 US dollars. So that can be projected above the top of the cup, which gives us a price projection of close to 3,000 US dollars. Now, I'm not saying that gold will definitely get to that level, but I am saying that the current gold price action looks extremely bullish. Silver is gold's more volatile cousin. As you can see from this chart, a lot more volatile. The chart looks a lot more jagged, but normally moves in larger percentages than gold. Now, after COVID, when gold was reaching above 2,000 US dollars, the silver price hit 30 US dollars. That level was hit twice and is now the important resistance level for silver to break through. At this stage, silver has seen some strength rising to $25, but I expect this to really ramp up, especially if gold continues higher. A silver breakout above 30 US dollars could really see price rises accelerate. Platinum also has an interesting chart. Platinum saw the price fall from 2011, fall below 1,000 US dollars. Then it consolidated a base, and since COVID spiked at 1,300 and now currently sits above 1,000, around 1,100. So the target for platinum is 1,300, and a rise above this level would result in a very strong uptrend. Lastly, we have the chart of palladium. Since about 2016, palladium showed an uptrend, which really ramped up prior to the COVID pandemic. Post-COVID, we saw the price rise to 3,000 US dollars. It then dropped down considerably, but has just recently seen the price rise back up to that all-time high of 3,000 US. And the main reason for this latest boom is due to the Russia-Ukraine conflict, because Russia is the largest producer of palladium in the world. Now, as well as precious metals having a safe haven premium, they are also used for a variety of industrial purposes. This is especially true for palladium, platinum, and silver, and to a lesser extent gold. So as well as being sought after just as a precious metal, they also enjoy the supply and demand of an industrial commodity. Based on all these factors we've discussed, gold was showing quite a bit of strength up to mid-2022, which saw the price in the mid-1800s. But since then, we've had an additional spike, which is a direct result of the Russia-Ukraine military action. That occurred during this period here, which has seen the price rise to nearly 2,000 US dollars. The very positive thing for gold, in my opinion, is that it was already strengthening prior to this invasion. So what does this military action mean? In my opinion, it will result in an acceleration towards precious metals as a safe haven. And the more precious metals rise, the more it will attract new investors, which will create additional momentum. Even if there's a fast resolution to this conflict, the consequences for the global economy cannot be avoided, in my opinion. As Russia and Ukraine are very large producers and exporters of oil, natural gas, wheat, and many other products, it's inevitable that prices will rise across the globe, which will just add additional fuel to an already hot inflation rate. So central banks now have the added pressure on the effects of the conflict on their economies, along with trying to contain the highest level of inflation seen in 40 years. And in some countries, it's the highest level ever seen. So precious metals might just become all the more precious over the next several years as this plays out. If you do want to get into precious metals before the potential lift-off, there's a number of options. First, you can buy physical, so you could buy actual bars or coins and keep them personally or have them stored for you. You can buy the actual price via futures or certain products on the stock market, and by doing that you're hoping that the price rises and you can sell at a higher price for a profit. You can buy precious metals miners and producers. If you wanted to spread your risk, you could buy an exchange traded fund over a basket of precious metal miners, or you could buy individual stocks on the stock market, which would mean added risk but also increased profit potential. The reason why you'd look to invest in precious metal miners and producers is because their profit will grow exponentially if the price of those precious metals rise. In this way, your profit might rise more than the actual price of the underlying precious metal. So a quality gold or silver stock might rise more in percentage terms than the actual underlying price of gold or silver. So with the loosest monetary policy regime we've ever seen across the globe, super hot inflation, a declining stock market and languishing cryptocurrencies, massive national debts, and now brand new geopolitical tensions that could result in a complete change of the global order. On a side note, Russia and China have been steadily building their gold reserves over the past several years. So with all that going on, it just might be time for precious metals to really shine, and by shine, I mean skyrocket. What do you think? If you agree or don't agree, I'd love to hear your thoughts and your perspective. Please let me know what you think in the comments below. If you've watched this video to the end, I really appreciate it and wish you all the very best in every investment you make. I'm Biko Konstantinos, and I'll see you in my next video.